Uh, we left already. You know the dream, Sagar. Mo?
Hey, Bruno, how's it?
community. In this video, we're looking at the attendee experience to see how guests at a Run the World event
You need internet? You need physical. Hey everyone, welcome to NMP Talk Show, and we're happy that you're joining us from wherever you are in the comfort of your home. And I see we already have two connecting. You're right on time. In fact, you connected just before time, and kudos to that. Thank you for doing that. So today on our show, we have returning guests. We had him last week, and he couldn't have enough of us, so he asked to come back. I'm joking. I asked him to come back. His name is Mohamedi Khopoleng. Mohamedi, nice. Are you going to share that cup of coffee with us? Welcome, Mohamedi. So Mohamedi today is going to elaborate on the topic at hand, interest rates. Are they interesting? Well, we've seen how the interest rates have gone up and down throughout the time. But here's a question. Do we really need to have interest rates? How do they, affect our life, our decision making, especially when we have to go for a loan? If you have a business, even individually, how does that affect you? So Mohammed is going to elaborate further on that, and we're happy that he has joined us. And like you've seen one of the videos, if you have questions, please type them on the comment section there, or you can grab a mic. When you grab a mic, we'll be able to invite you to come over and join us on stage. Mohammed, you sound too quiet. Is your mic working? He says he cannot hear a thing. And we were just talking now. Okay, Mohammed, I think you need to check out and check back in, and it will ask you to activate your mic. All right, while Mohammed is doing that, trying to sort out the technicalities, it always happens. You test before time, and then when the time comes, now you're not able to connect. So who's connecting now? Welcome, Morare. Welcome, Bahati. You can clap your hands there if you can hear us. There you go. Thank you guys for coming. So what are you looking forward to the show? when you had this word interest rates, what were you actually looking forward to hearing? Or what are the questions that you actually want to be answered for you? If you can type them on while we're waiting for Mohamedi to reconnect. And he's going to have his own presentation. After the presentation, then we can answer those questions. So you can type your questions now. Oh, we lost him again. Ooh, what happened now? Let's see. Let me invite you, Morare and Bahati, on stage in the meantime. Let's see your faces. No makeup necessary. You can just connect. Okay. Are we coming on? Bahati, join us, please, man. There you go. Okay. Right. While we're waiting for you to connect, you can also type your question there. What you want to hear. Now, regarding the interest rates, are you connecting there? Okay, apologies for these technicalities. Can I get you to listen to the video while I try to reconnect our speaker there?
Building community. In this video, we're looking at the attendee experience to see how guests at a Run the World event
All right. I think Mohamedi is almost coming in. Mohamedi, let's invite you on stage. Can you hear us, Mohamedi? You can switch on your camera. Ah, there. Yay! I was almost going to give up on you, Mohammed. Now we can hear you. Can you hear us?
I can. Can you hear me?
Awesome. All right. So Mohammed is going to expand on this topic, interest rates, how they affect us, how they affect our decision making in terms of going out there to a bank and trying to find a loan, how much you need to pay back, and can in the long term benefit you, especially when you're saving. So Mohammed, the stage is yours, man. Everyone is being anticipating this moment.
Thank you. Thank
Go
you.
for it.
I think the pressure's doubled now with the technical issues. Sorry about that, everyone, and thanks for bearing with me. I just hope it holds. I just hope it is okay at the moment. Right. So with everything we do in life, we always get told, well, there's two sides, my side and your side. Some will say, well, there's three sides, my side, your side, and the truth. Well, to get away from that debate, perhaps we should use a coin as an example. So there's always two sides to a coin, heads and tails. And the one can either be bad or good depending on the situation and on whatever side it lands on. So the same is true with interest rates. They too have two sides to them. They can either be good or they can either be bad, depending on which side of the fence or what end of the stick you find yourselves to be on. And as we go through this discussion, by the time we finish, you'll understand why, when we know that we've got seven wonders of the world, natural or man-made, things like the Statue of Liberty, Christ the Redeemer in Brazil, Taj Mahal, such things, they constitute the seven wonders of the world. But by the time we are done with this discussion, we will understand why Albert Einstein said compound interest is the eighth wonder of the world. We will get to that point. Now, interest rates. You see, the world would have been easier, or was easier, before this concept was introduced, when I could borrow you money or you could borrow me money. If it's 1,000 rand, you know to expect 1,000 rand. Unfortunately, with the passage of time, people have become untrustworthy. We do not agree. We have formed these really bad habits, such that it becomes a bit tricky if trust has to come into play. Now, interest rates are nothing more than a risk being priced, given a premium, and then expected to come back. Let's put that simply. So a bank, a financial institution, gives me money, and depending on what my credit rating is, depending on what my score is, I'm a risk, and it is my score that will determine what kind of a risk I am, either a good risk, a bad risk, a high risk, that kind of thing. And based on the record I've built, they price the risk, calling it interest. And when I pay them back, I pay them back in interest, because they're lending me their money was a risk on their part. Now, understanding this will get us to make better decisions when it is that we want to take a loan, a credit card, vehicle financing, a home loan, or whether we are on the other side of the fence and we are looking to invest, save, that kind of thing, and we are looking at what interest rates to go with and the terms and the rates and the conditions and all of that. So let's start with the good side. So much as interest is priced for a risk, for money that may or may not come back, it can be a good thing, wherein you give your money to a bank, a financial institution, and you say, save this for me. I'll come back for it in 3 or 5 years or 10 years, whatever the case. They will not just sit with it because they are in the money business. They work with this asset money. So they will circulate it, make more money out of it, and part of the interest portion that they make, they will give you a portion thereof, which is a good thing because you can earn your money, put it somewhere to grow, and just sit back and watch it grow. However, the thing with us, especially these days, is we have formed this habit of instant gratification. So there's a whole culture of wanting things now. So it's going to be very impossible if we want to look at investing, making money out of it, it being a success and actually changing our lives if we are going to look for instant results. It's a long thing. When you get into it, you have to be prepared to play what's it called, the long game. Yeah, so you must be in it for the long haul. Now let's make an example. Here I am. I've got 10,000. I want to invest. So this is how compound interest works. My 10,000 at 10%, and I add to it every month. It's a choice. You can either make that or not, that choice or not. So here's a lump sum of 10,000, and for every month for a period of about 5 years, I will put in 1,000. On top of that 10,000 of the lump sum that I've put in. With the 10%, by the time the 5 years has ended or elapsed, the money I will get out could be, if notwithstanding inflation and all of that, but I stand to get back 114,000 from my 10,000 and those 1,000 I've been saving. But with that interest portion, I stand to gain 114 plus thousand. Now, if I were to do it the old-fashioned way and say I don't trust banks, I take my 10,000 under the mattress, and every month I get money under the mattress for 5 years. What will then happen is all of that will come to a total of 70,000. So you see what has happened. Because of the interest in the same period with the same amount of money I've put in, if I put it under my mattress, I'll get everything that I've put in there, 70K. But because of the interest portion, I stand to gain about the 40, 50 more thousand from that in the same period. That's the beauty of interest rates. And that's the beauty of doing it in the long haul. Interesting, is it not? Now, when Einstein said compound interest is the eighth wonder of the world, he went further and said, those who understand it will earn it. Those who do not will pay it. Now, we want to go away from this conversation understanding how we can earn it, and even if we do have to pay it at the very, very minimum. So we've got a couple of options that we can invest our money through. The simplest one, you get to a bank, you say you want to invest, you'll have a fixed deposit account open for you. It normally takes about 24 to 48 months, 2 to 4 years. You put your money in there, and the interest at the moment in the market are going at about, from the top banks, around 7 and 8%, there or thereabout. So you put in your money there, you leave it for the long haul, and you can always look at how it's growing. And by the time you get to a point where you want to withdraw it, or when you're eligible to get it back, it will have grown in leaps and bounds. Hoping, of course, that inflation goes your way in all of that time. So really what we want to do is we want to box cleverly. So a fixed deposit is one option. The second option we can look at going for is what's called a TFSA, tax-free savings account. So it's a savings account, it earns interest, and it's tax-free. So that too we can look at going for. There's things like unit trusts that we spoke about last week. What? Oh, the other one. It's very short term, but it also earns interest. You can go into a bank and ask for it to be opened on your behalf as well. It's called a 32 days notice account. So you put in your money in there, but before you come get it, you must give the bank 32 days notice. So all of these options, a fixed deposit, a TFSA, and a 32 days notice, they earn better interest than a simple savings account. So whatever you do, look at different options, look at different offerings, and calculate and ask for projections as to how your money would grow by the time you want to get it out. So that's the one end of the stick, right? The one side of the coin. So it's really interesting from that angle that we can make money out of this mechanism, this tool. However, we can also lose quite a large sum of money if we do not box cleverly and do not understand what we're doing. Here's what we mean. Remember, as we say, Einstein said, if you understand it, you'll earn it, and that's where you want to go. But if you don't, you'll pay it, and boy, will you pay! You'll pay it, and you'll pay hefty money. In that regard. So how it works is this. Here I am. I walk into a bank. I walk into a financial institution, and I say, "Give me 50,000." And at the moment, the most that they can charge you by law, according to the NCR, is 30%. That's the cap. And if you see your interest rates, if you go look at your credit report after this, and your interests are anything between 20 and 30, boy, you're in trouble. That alone should tell you that you've either built a bad record, your score is in shambles, or something along those lines. So if I say, give me 100,000, for instance, and they say, it's fine, we'll give it to you at 30% interest. That means in a year, how much I owe the bank is not only the 100 that they gave me, it's 100 plus 30. And they give it to me over a period of 5 years, right? So what then happens is, it's 100 there. And I paid back in installments, very small amounts to begin with. So it's 130 because of the interest. So I paid this back off. Say, for instance, in that year, I've paid off 100. So by the time we get here, I'm left with 30. That 30 has another 30% added to it. So you see how it goes. Whatever balance you've got at the end of each year has a 30% interest attached to it. That's how you keep paying back. It looks like it's going down, but it's not. So this is why we need to understand the level that we are at, how much it is that we are taking, how much of the interest portion are we paying back in the installment that we're paying, and how much of amount are we paying back. That will get us to make better decisions cleverly when a problem though comes, and we spoke about this as well last week. If your installment, for instance, your repayment is a 2,000, say, and you decide that this month I don't have the full 2,000, and you decide to pay back 1,000 rand, you're throwing away your money. It don't work. It will not work because you're working backwards. The best way would be to go in as to how it is that you will pay back and get new terms on that obligation. Do not assume that they were human. So if you come to me and you say, I might understand, but because we have to put in place, now the system will not understand. Set out for you to do and pay back that way. Interesting, is it not? Did you know that taking 100 at 30%, you only took 100. You want, with the cap of where the interest rates are, you could end up paying back double what you took, plus the interest portion that was that was asked of you. And we are really fortunate. We're really fortunate because the National Credit Regulator has set in a law, the Injuplam rule, where it caps how much interest you can be charged. If that were not the case, my oh my, we would be paying back hefty amounts of money. Now, there's two sides to this coin. If we are clever about how we want to invest our money, we want to look at the best options that are there, and we want to have the patience, get into the habit of enduring and try and learn delayed gratification. Stop the instant gratification. Wait for it. It will come. You must just be in it for the long haul. You see, a bucket, it is those small drops that keep coming into it that make it full eventually. But if you're going to sit and wait for it, it's going to take a long time. So, the mattress, the putting it, digging a hole somewhere in the yard, and that doesn't work. This thing can work in our favor if we do it well. However, if we don't do it, and this is what I want us to go away here going to look at. So pull your credit report. If you don't, contact me, I can help you with it. Pull your credit report, look at the interest rates you are being charged on your obligations, and trace back to why. Perhaps you're not paying what you're supposed to be paying on your obligations, and this affects your credit score, and this affects your payment history. Over time, these may look like small things, but over time, this will make you lose a whole host of money. On top of that, when you want to get insurance for your car, for your household contents, personal insurance, that type of thing, with the very same profile of someone else who's your age, your race, lives in the same neighborhood, but because they make better money choices, you will pay a more expensive premium for the same cover. So here's me, and here's my friend Tabo. I've formed these bad habits around money. We go into Old Mutual, say, and we want life insurance. Because he's got a better credit rating than I do, because he's got a better payment history, and because he's more responsible in terms of what the system wants, in terms of what the credit granting cycle requires. For a R1 million life cover, he may end up paying 200, and I may end up paying 8,500 for the same cover. And we're the same race, we're the same age, we're the same body size, we live in the same area, we drive the same type of car, we work the same job. But because of the money habits that I've formed, because of where my credit score is and the history that I've built, I will end up paying a whole lot more than he will. So it is when we take stock of what we do and try and build our score, and that takes some serious discipline on our part. Pay what we need to pay, understand the terms and the conditions of our obligations, do that which is required of us. It is when we do it that way that we will get on the better side of the system. And really, it is an eighth wonder of the world, because who else, when you're hiding your money under that mattress, will come and add 40 or 50,000 more to it? No one really. And If I want to go to a bank and ask for them to give me money, and I've got nothing to show as surety, how then do I expect them to trust me with their money? So it is these interest rates that facilitate these transactions, and they get us to where we want to get. What's a bank? A bank is an institution, right? But tell me this, what's the difference between a bank and a stokvel? A stokvel, a group of friends, for the most part, it's our moms, ladies. They group themselves together, they contribute money monthly, and at the end of the year, they take it out as a lump sum, and they do what they need to do in the house. They buy groceries, that kind of thing. The bank is exactly the same. When banks are set up, they don't have money. So it is the savings that we put into the bank that they take and invest and make money out of, pay us a portion of that they make money from. Right? Now, the fact that you can go save in a bank, look at all of these options that you can use to save. Open a stokvel with your friends. Make sure that it's got a memorandum of understanding. Make sure that whatever it is that you're putting in will be worthwhile for you in the end. Save money in any or all ways that you can. In addition to those tax-free savings accounts, in addition to the fixed deposits, look at these options. Where we are now is that inflation is rising. We see what's happening with the petrol price, and I can tell you now, it's not going to get any better. In fact, it's said that we're on the cusp of a recession with how things are going. That's how bad it is. Therefore, what needs to happen is we need to be a bit more responsible with how we use our money and think for the future. Have foresight. Whatever you do now will not end now. It will always have consequences and a bearing in the future, whether good or bad. So the money that you save now, be it for the long haul and look in the future how it will help you. However, if you're going to make use of credit, make use of it so responsibly that you know what you're getting yourself into. Know what the interest portion of it is and compare if it's really, really, really worthwhile. And when you do take the decision to go that way, please do it responsibly. Please have the utmost respect and discipline in that regard. If today you're sitting and you find yourself already in trouble, we are here to help. We, through our mechanisms and the relationships we formed in the industry and the certifications that we have, we can sit and negotiate better interest terms so that whatever it is that you owe, you pay it back quicker and you are able to manage it better. So please take everything that we've said today, think about your own situation and think about what it is that you are looking to improve. And for any questions, we are here. Thank you very much.
Thanks, Momedi. That was very insightful. Don't go away. Eh? You can switch on your camera still. It was interesting that you mentioned something very important. Instant gratification. I mean, this instant gratification we cannot run away from. You might agree or disagree with me. It's like we programmed for instant gratification. We use our cell phones, our texting is instant gratification because short message, you send a short message to somebody, you expect them to respond at the time. You have 2 clicks, or what do you call it? 2 ticks, blue ticks. If somebody blue ticks you, you get offended. I mean, that's how we are now. We are a generation of instant gratification. Now, when you put it with money, it does really make sense. And it's actually a mind shift that we need to go for. If we don't, we're heading for disaster. But thank you for that explanation. It really hit the spot there. And when I was working full time, I know, I used to have those instant gratification a lot. And there's this bank, I cannot mention the name. That was my go-to bank. Every time I needed money, I would just go there, give them a call. I don't even have to go to the bank. Just give them a call, say this is how much I need, and then by the end of the day, I have the money. Now, paying back was very painful, but you think I would learn? When I've done paying back, even before I'm finished paying back, already I'm going for some more. So
Oh, yes.
money management is very important, and especially if you don't know your interest rates and all that, it can be a prison that you'll never go free from.
Sure.
And who's the guy that you mentioned now? If you don't understand it, you're paid.
Einstein.
Yeah, this guy. Yeah, I thought he was famous for something else.
Well, he was a mathematician, so it's a math formula.
I know. Yeah, I think I saw somebody sending a question on Instagram. Let me get it for us.
Okay.
And everyone who's connected as well, please, if you have a question, you can type your question on the comments there, or you can grab a mic and then we can invite you on stage. So Tabang Somo says, if your credit score is good, are these services still advised to further? Oh, okay. I think I need glasses here. Eh? If your credit score is good, are the service still advised to further fight the scourge of interest rates?
Well, it depends. It depends. If you feel you're paying too much, you probably are. And look for accounts, especially unsecured debt. Your clothing account. It's possible to get a 0% interest rate on that. It is very possible. So it just depends on what route the negotiation takes. So if you feel you're paying too much, then you probably are. And who knows? If you give it a go, perhaps you may be able to get better terms.
Wait. How do you get zero interest rate? I'm sure everyone connected here would like to know.
Look, I've taken debt, and I owe 1, 2, 3, 4 of you.
Yeah.
I'm struggling to pay back, and I want to pay back. And as I say, especially for unsecured debt, the so-called small ones, your credit card, well, everything besides your vehicle and your house, everything else,
Yeah.
a personal loan, all of those. So we sit and we say, look, I want to pay back, but the terms now are heavy for me.
Okay.
So here's the principal amount that I'm supposed to pay, 10,000, say. And with the interest that you require, I'm going to end up paying 14 or 15,000. Let's scrap the interest and let me work on paying back the 10,000. They want their money back one way or another. No two ways about it. So because the law makes provision for that, it is an option that's on the table. However, whether or not they agree is something else.
Yeah, I wanted to find out the clause. I need to write it down and go and consult.
It's in the National Credit Act.
Yeah.
I'm not sure. I'll have to go look. I'll have to go check.
All right. Tabang, is your question answered? You can type there on Telegram. Then I can do it for you. I think it is answered while he's typing. There's a delay in feed there, so maybe he's gonna catch it up. Right. So let's see. Do you have any more questions from our audience? The Morare. Oh yeah, Tawan says yeah. He's answered.
Okay.
Okay. Now here's another question while we're waiting for other questions to come through.
Sure.
If I go and apply for a loan, right?
Mm-hmm.
It might be a simple question, but I think it's going to help a lot of people. I go and
Sure.
apply for a loan, let's say of 100,000, and
Yeah.
they say I can pay this loan in 5 years, right?
Mm-hmm.
If I paid half the years, okay,
Yeah.
I'm having a feedback here. If I pay half the years,
Mm-hmm.
how does that affect my credit score?
So what that means is you will have kept to your obligations. So in those supposed 5 years, effectively 2.5 years now,
Yeah.
you've so from the system it has picked up. And remember, okay, but we'll come back to that. So the system would have picked up that you are consistent in your pay.
Okay.
And if you're consistent in your paying, you are a good risk. And because you're a good risk, it rates you higher, a bit higher. You see, it's like between you and I. If if you and I are family, and I'm that family member, we all have these family members. I'm always borrowing money, and I'll say I'll bring it. For a fact, it's not coming back. But there's these certain ones that you know that even if they will struggle here and there, but it will come back eventually. It's the same thing. So if you form these habits over time, and the system can pick up that you are trustworthy to an extent, then it grants you a better rating, and that scores you better.
Yeah, that's good. Okay, something
Yeah.
to think
Oh,
about.
sorry to interject. However, what we must never do is, because we normally don't have one obligation, we don't have one loan or one credit card or that kind of thing. Don't focus on one and let the other suffer, because then you're sort of chasing your tail. It won't work. So
Okay.
do it for all. Be consistent with all. Only then will it improve.
That's a good advice there.
Yeah.
Okay, let me check. Any more? Morales said, keen to hear about something interesting and different about interest rates. I think that part is covered for you, Morare. Hey? You got something different. Unless if you have a comment on that, we're welcome to hear your comment as well. Absolutely, he says. What do you mean absolutely? Did you hear something different or you have something to comment on? All right. Okay. All right, let's see other. Okay, Tawang is typing there while we're waiting for his question to come through. Right. We spoke about instant gratification when it comes to money. We spoke about being a good risk. And Taban says, for gaining interest, is it best to save in a savings account or in your bond?
A savings account, no. Anything else will have better terms. A straight and simple savings account, no, because the interest there is a lot less than any and all else. So you can do it via your bond, and as you said, you can do it via unit trust, a tax-free savings account. That's something you can look at, because with a savings account, you can access the money at any time, right? Mm-hmm. Now that's where the problem comes. So the only way they can guarantee that you can get a higher premium, as it were, is if they know that they've got this money available to them to make use of on the investment market for a solid 5 years. This is why if before 5 years you want to pull it out, you get penalized because they had counted on the fact that they would have it, that you can get. So with a savings account, a high. Okay.
Sorry. Yeah, sorry.
Okay. So with a savings account, you can pull it off at any time. So they've got no reason to give you a higher premium on that because it doesn't really work for them. It's just a stimulator. It just gets you stimulated and it shows you that this saving thing does work. And as we say, the best way for it to work is for you to do it long term. And on your bond, it's brilliant because you either have 10, 15, 20 years on that.
All right. Thabang, is your question answered? I guess it is, eh? So bond it is. Right. There's now this bank is owned by this gentleman who owns a soccer team. I don't want to mention banks because I'm not getting anything out of it.
Yeah, I got you.
You got me, eh? With the yellow.
Yeah.
Okay.
Yes.
So
yes.
Yeah. They have an option there where you can save, right?
The goal
and
saver.
then and then they give you interest on it, and they will tell you in this period of time, if you save this amount, you earn 5% of interest on it, and then it grows to 10%, and up to 700,000 that you can save in there. Would you say that is a good step to start with when you're trying to get into the routine of saving and investing so that you can have interest?
With them, it is because they have the least amount of charges. They have the most interest to offer. So if you're looking to start off with them, it is good to go that way. But with the big boys, hey.
Yeah, because when I chill with the big boys, eh? So I think the stock fall. I think the stock fall could be one route that they can explore, eh?
Yes. And they worked so well in the past. I'm not sure where that culture went to. They used to work so well.
What are you talking about?
The stock falls.
Okay.
Yeah. They used to work so well.
There you need discipline. And you need that uncle or that auntie that's very strict. They will call you up and say, you have not paid this month. All right. Now we're getting good comments from our chats there. Francis says, Murara says he's happy about it. Thabang is also happy about it. Let me see if there's anyone who sent through a question. Okay. Tom says hi. Hi, Tom. We see you on YouTube. If you have any question, please type it there. Interest is king. That's what he says.
It is. If you get it, you'll earn it.
Yeah.
But if you don't, boy, you'll pay it.
Man, we gotta be Albert Einsteins of today,
Oh yes.
Yeah. Oh no, that's good. All right. I don't know if you have any closing remarks. If there's anything that we want to add as well, please, anyone on the group there, you can also send your questions, comments, and how you feel about it.
Yeah. So as I say, it's good to qualify and be able to access credit, because the honest truth is we would not have unless if we've made it big time in the tender industry. It's almost near impossible for us to have the hard cash, the liquid cash to facilitate everything that we want in life. Otherwise, all of us would buy cars cash, would buy houses cash. We would not need to have a medical aid, for instance, because at any point that we fall sick, we've got liquid cash just lying around. In an ideal world, that would have been good. However, the reality is we find ourselves to be where we are.
True.
And as much as it is good to be able to access credit, we want to do it responsibly. We see this every time. It was just unfortunate that we had a lady come in for a consult this morning, actually. So we started working on her yesterday. She came in this morning, and she's having a car report because in her head she's been paying, but what she's been paying was not servicing the actual fees that need to be serviced. So as we go away here, I want everyone to have a look at the credit report, understand in detail what is going on there. And when you get, if you want to apply for it, I'm not sure how many of us know this, but it's like buying material for building or buying anything. If I'm not happy at Neo's Hardware, I can always go to Tabo's Hardware around the corner and get better terms and say, no, this guy quoted me this. What are you going to say to me? It's the same thing. If Bank A gives you these terms, you are entitled to get that quote and go away with it and go to Bank B and say, but that guy for this amount gave me these terms. Give me better terms. And he too is entitled, you're entitled to get that quote from him as well and go to Bank C and say, 1-2 gave me these terms, beat them and I'll go to you. But for the most part, we want to walk in and, as you say, you'd just hit them up on a call, bank notification, and you're rolling with the big boys. However, it's always good to look at our options and look at where we are. And I say this again: we want to box cleverly. How did Muhammad Ali like to say it? He said he used to make ballet out of brutality, sting like a bee, fly like a butterfly, something like that.
Yeah.
So we want to do that as well. So we want to be clever in how. So as we look at whatever it is that we are seeing on a credit report, assess it, and if we want advice, if we want a way of looking at it from a better perspective, we are here to help.
You see, Mohamedi, Morara, I acknowledge your question there. I'll come to it in a moment. Mohamedi, the thing is, most of us, when we go to the bank, it's when we are strapped, like we really need cash.
Yes.
We really need money. We don't just go to a bank and say, I need a loan of this much. Your interest rate. Let me go to another bank. At that time, you are stranded. You really need the money.
That's the problem.
So this culture of shopping around for interest rates, it's not a big thing.
Yeah.
That's according to me. It's not a big thing because coming back from that background where you urgently need money, and maybe at that point in time your credit record is not even as good as you like it to be, but you need the cash. So you go to the bank hoping that they approve it. As long as they approve it, you're not going to the bank knowing that, no, they're going to approve because I know I have a good credit record.
Sure.
But it's one pill to swallow, and it really needs to sink in.
Yeah.
So Murar now says, is it advisable to buy a car cash through a home loan and paid over a spread period of time at a cheaper, higher lending interest rate?
Yes and no. No, in the sense that because it's unsecured, you'll because of the fact that you took hard cash, You bought whatever it is that you wanted to buy. That money is not attached to anything, right? It's unsecured. So you are bound to pay a higher interest on that. However, if you do take vehicle financing, you pay less interest because if you don't pay, they can get the vehicle back. But I see a lot of people are going the cash route, so they don't mind paying back that much a higher interest rate, that little more, because even if they do run into trouble, no one's touching their car.
I didn't know people could do that.
Yep. Even on your credit card, you can max it out, get a car, pay the credit card back.
They won't deposit the car.
No.
All right.
Yeah.
Okay. Morara, are you answered there? No. He says no. You can do better, Mohamedi.
Okay, so let's say this.
Okay. Let him grab a mic.
Sure.
Let me ask you again. Maybe typing is a problem there.
Yeah.
Good. You can join us, Morari. Grab the mic. Welcome.
I don't know. I see there's a video.
Yeah, we can see you.
You can see me.
Yeah.
No. What I was saying there, so what I was saying there is sometimes people will opt to take money from the home loans because home loans have a cheaper interest rate to a vehicle finance. So, and rather than have that debt under the home loans and then have a car purchased for cash at the cheaper rate, and then make those payments which were supposed to go to vehicle finance to your home loans. So if, for example, you're going to pay, let's say you got the car for 500,000 and you're going to pay, just for easy math, it's not really correct, say 10,000. Now you go to home loans where that 500,000 then it will go to maybe 6,000 per month, and then instead of then paying that 10,000 to your vehicle finance, then you're paying it to your home loans where the interest rate is cheaper. Hope you got what I was saying.
Yeah.
Don't run away.
It's understandable. It's understandable. So the only thing with it, but okay, maybe I'm the one who did you a disservice. I did not answer it correctly. So the other element that comes into it is, yes, you will pay better or better terms on. Okay.
Morari, are you still there? I don't know what I did. I think it's me.
He is there.
Okay. All right. He's still there.
Yes. Okay. So let me have a quick better at it. So I did you a disservice there. Another element that comes into it, it's true on the home loan, if you choose to cash a bit of it out and purchase that vehicle, it will work for the terms. They will go a bit lower. However, it will extend the repayment period of the loan, the home loan itself. And he did ask this in his question, and I neglected to factor it in. So I did you a disservice there. My apologies. So it is better that way. However, it will just extend the repayment period and extend the longevity with which you pay the home loan off. But at that time, you will still have your home, you will have a car paid for cash, and you will have better terms paying that off. So it is a good option to go with as well. I've heard of it, but I've never really looked at that in that light. So it's something I'll also something I'll also look into as well. So thank you for that. So it is a gem. Thank you.
All right. Let me see if I do understand you. This home loan already exists
Yes.
because you have a house
Yes.
and you've paid it. But now, when you're paying it, it doesn't save that money that you're paying back. What you pay for the home loan finishes the debt, right?
Yes.
But now you want to buy a car. How do you now go and draw money from that home loan without refinancing the house?
It's a form of refinancing, really. And remember, it's secured because remember the value of the house when you bought it and where you are now, say 3 or 5 years later, the value has appreciated. And the bank stands to lose nothing because whichever way it goes, they'll still sell it and get their money back. So you sort of refinance the house, but they just give you the cash. Say for instance, the house you're buying is 800. You've paid back 300, right? It means your balance is at about 500. You decide to take 300 in cash and go buy the vehicle. Then it means the balance goes back to 800.
500. Oh, 800, yeah.
Yes. So essentially, starting over.
All right.
However, it has worked for you. And here you are, you've got a car you've bought, you've paid cash, you still have your home loan, and you will pay it the way you've been paying it. And who knows, by some genius, you may get a huge lump sum somewhere, and you decide to service that. You cut it in half or a portion of that, and you're still good to go.
Okay. He's clarifying that. He says sometimes you may have an access bond facility where you can have access to a portion of your home loan amount repaid.
Yes.
Good to know.
Yes.
Good to
As
know.
I say, it's a gem. I'm
right,
looking
guys.
into it as well.
Awesome. Thank you so much. This was a wonderful and insightful discussion that we had. So before we go away, let's take a selfie. Let's take a selfie. Please switch on your cameras. Take a selfie there. Selfie time. Yeah. That's what we're looking forward to every day.
Yep.
All right. Okay. Good man.
I'm good.
Yeah. Marara, are you doing yours? Bahati? It's selfie time. Oh no, this was a very, very interesting topic, Mohammedi. You know, it gave a different perspective to how one can look at interest rate.
Yeah.
Not looking at an enemy, but you know, like Albert Einstein's saying if you understand, you can earn it.
Yep.
And I see a lot of people who understand, and that's why they can earn it. But unfortunately, for those that did not understand, we ended up paying so much more that when we hear the word interest rates, we just go out of our minds because remembering the 4 steps that we have taken.
Yeah.
So thank you also to those that are connected on Telegram. It was a nice discussion. Your questions as well, we really enjoyed them. I hope you are satisfied with the answers. And on the platform too, we also had some connecting on YouTube. Thank you as well. So just gonna close the selfie. What is Bahati saying? Is he chickening out? Bahati, you can just say thank you for information. We're waiting for your selfie. Come on. Right. Anyway, thank you so much. And this was very informative. And as usual, we want to close our show with our jingle. And if you want, you can dance to it. If you can dance to it, and we'll see you next week with another topic. Be on the watch for my status update. I'll be informing you what is for the discussion the next time. Right. Thank you, and enjoy your evening. Signing out.
Thank you. Cheers, everyone.
And we need to-